Do you know that the property market is going to crash? That's what a lot of my friends have been telling me. Of course, in the last 2 quarters, property transactions are at an all-time low. People are beginning to feel this way. But is it true? Or we cannot predict events like pandemic or war that can halt economic activity? There's one thing that the banks can predict, which can have a very big impact on Singapore's property market, and that is interest rates. But how does property prices move with interest rates? I'll cover this a bit later. But first, let's look at what the banks are saying about the interest rates moving forward. Here is a chart taken from UOB Bank showing a projection of the US Federal Funds target rate. As we can see from the forecast, UOB is expecting 3 rate cuts by January 2025, each time at 0.25%. This is after a long period of 5.5% interest rates. The cut will take place if inflation in the US has come under control and the Fed feels that they can ease the rates without causing another jump in inflation. But how does interest rate movement affect property prices? If you look at this comparison of historical SIBOR and SORA interest rates, which generally move in tandem with the US interest rates, to the property price index, you can see that during the last 2 times when interest rates fell, property prices started to rise quickly when interest rates dropped below 1%. However, what's interesting is that in Q3 2013, while it is expected that low interest rates will continue to push prices up, the property price index fell instead. This was because the Singapore government intervened with property cooling measures that reduced market demand for real estate and also prices. So here is an example where, given the determination of the authorities, the movement of property prices can be limited with sufficient government intervention. So did the Singapore government intervene in property prices in 2024? And what do they hope to see for prices this year? One of the early signs of control of property prices happened in the tender for the residential land in Marina Bay called the Marina Gardens site. URA released a plot of land at Marina Gardens for private developers to tender for purchase in January 2024. The plot received a sole bid from a developer at $984 per square foot per plot ratio, which is 30% lower than the winning bid back in July 2023 for a neighbouring plot of land at $1,402 per square foot per plot ratio. If this tender were to be awarded, it would have lowered the overall price of real estate in the area and likely start a crash in Marina Bay properties. Therefore, the government decided not to award the tender in a move to maintain prices of the area. Of course, stopping one developer from selling at low prices cannot stop others from doing the same. But if many developers suddenly offload all their inventory, it is definitely going to impact the property market. Thus, the second clear indication that the government aims to maintain current prices came as the grant for 44 new condominiums more time to sell off their inventory before the developers are slapped by the additional buyer stamp duty penalties. Under current ABSD regulations, developers pay an ABSD of 40% on land they acquire for residential development, but can obtain a remission of 35% if they sell all the units in the development within 5 years of their buying the land. By providing this extension, developers are not forced to drop their rates suddenly to offload inventory and avoid the penalties. This keeps the property market stable. Therefore, with these 2 actions recently by the Singapore government, it is very clear they are planning to stabilize the property market. So if you like to take advantage of the market situation today, scan the QR code here and let's talk.